Hi, it's Ali here, and we're back. It's 2019, and at the end of last year, I got a couple of emails from people saying, are you going to start bringing back the market commentary? Are you going to do a few more of them going into 2019? And the answer is yes. So we're back with the market commentary. Now, for me, coming into New Year, it's not about trying to change a million and one different things, but it's a good opportunity to review what you want to achieve in the year going forward. And as I said to my room students, and I go into a bit more detail with them when we're talking about creating new habits, but I think that particular subject is very important. Create a few new habits. So one of the new habits that I'm going to create is to get my arse in gear and at least twice a month get you a short market commentary video where we have a look at a couple of the main indices, see what's been happening, look at some of the trades that we've placed, and just give you a perspective of what's going on. So the market commentary is back, and I'm going to get into it straight away. I'm not going to waste any more time. Let's go and have a look at the S&P and see what has been going on. So here we are on a monthly chart. End of last year, we had a bit of a move down. It was reported in the media that the crash had started. The S&P has a lot further to go. Experts say that this is the start of this. Some experts were saying the opposite. So if you read the news, you can't really tell what's going on. But it was a fairly big move down. It was the biggest retracement that we've seen since the bull run started in 2009 and since we broke the prior highs of 2007. But as traders, what we're looking at is the pattern here. Now we've got the S&P here. The Dow is very similar. It didn't quite make its monthly 50, so it didn't get a bounce off the monthly 50. And it's got slightly more of a double top here. But that double top on the Dow with the divergence was a big clue that there could be, and there was, a move down. But I'm going to stick on the S&P at the moment. You can see the S&P actually had a slightly higher high, but again, that big divergence, that step off that you can see there on the RSI. But let's just look at the pattern because this is important. So we're looking at the monthly chart. So from a trading perspective, that is my longer term perspective. You'll notice that the last hit of the monthly 50 moving average, the orange moving average you can see there. Okay, I've got it set to exponential. Simple might be slightly different, but the exponential hit was there back in 2011. We had a move back down here that enabled us to come back and get very close to the trend line. So what you'll notice here is price came down, tested the 50, and we actually said in the room that we could be due a bounce here and we could get some possible intraday and swing long trades because of that. We got the bounce, and a lot of the experts were calling further down. And in that scenario, it's really a toss of a coin. Some experts will say we're going to bounce back up. Some will say we're going to go down. That's why I don't listen to so-called experts. That's not what it's about. For me, it's about the pattern. So for me, I'm not going to have a long-term bearish view on the S&P or the Dow until I can see, I'll just get rid of this drawing, until I can see a close, so a monthly candle close below the trend line. Now it may be there, it may be further up here. We don't know what it will be. But let's say it comes down from where we are now. Let's say we come down the next couple of months. If I get a close below the 50 moving average and below that trend line, then what that shows me is the pattern has changed compared to here and compared to here. We've not only just had a break of the trend line, a break won't be good enough because that might be enough for people to start buying back in again. We'll only know once we get there. But for me, when I look at this, if I get that close on the monthly, then my longer term bearish view. Now, again, I'm not bullish right now. I'm not overly bullish, but I'm also not overly bearish. But what would swing my opinion more towards the bearish would be a close on the monthly, and that's the long term. Okay. Now, the way I would prepare for that is I would look at the weekly chart. I would track the weekly chart. Because it might time at the same point. But what we might get is if price was to come back down and move down from where we are here, and price was to come back down, if we came down and got a test of that trend line, that would be the first, maybe even a daily close. But then if we got a weekly candle close below that level, I would be on full alert to see what the monthly chart would do and whether a monthly candle would do the same. So medium term, and short term, again, I'm fairly neutral because we've had this bounce. We're back in this zone here. And if you look carefully, and I just pull Fibonacci on here. Now, I don't really use Fibonacci a lot in my trading, but I can use it to see, look, there's the 50% retracement. So we've had that move down. We've actually recovered almost 50%. The bounce is about 50%. And then you can see here, we've got the weekly 50 moving average. So if we come up and get clearly above that level, I would be looking for price to move back up towards the highs. If we bounce off this and start to come down, then I'll be watching the daily and the weekly chart, but I'll be watching this monthly trend line. The weekly trend line doesn't mean a lot to me at the moment because we've broken that, closed below it and got away from it. But for me, what I'll be watching is that. All right. So at the moment, I'm fairly neutral on the S&P and the Dow, but I'm keeping a close eye on it, and I'll be analysing it and giving you an update. But now you know from a long-term perspective, until I get a monthly candle close below this monthly trend line, all the way up here, my view will not change from really what I'm going to call a kind of neutral view at the moment, a wait and see view. Now that doesn't mean, that wait and see view doesn't mean that we haven't had and won't have further trading opportunities. We had a couple of lovely trades through here, a lovely couple of opportunities as we started to move down. So intraday wise and short term wise, I have had a bearish view, but as I've said, long to medium term, fairly neutral. So we'll wait and see what happens on that. Now, next thing I want to talk about before I talk about a possible trade that I'm looking at and building is pound against US dollar. Why? So the reason I want to bring cable up here, and we're looking at the daily chart of cable, is because on Tuesday we've got the vote. We've got Theresa May's vote on the Brexit deal, which is likely to be rejected by Parliament. So the questions I've had is, will you be trying to trade off the back of that? And the answer is no. And the rule is, if a broker is sending you emails saying, why not trade Brexit? Why not trade the Brexit deal and the Brexit vote? If they're sending you an email, then that's the last and that's the absolute reason you don't want to be trading. The last place I'm going to be is trying to trade intraday or trying to capitalize from that. Partly because the brokers are likely to widen the spreads anyway. So really that just becomes a gambling scenario. But what about what goes on? Well, from my perspective, I think a lot of what is going to happen will have been priced into the market anyway. I think in terms of the expectation, if the deal is turned down, I don't think that will be a huge shock to the city, to hedge funds. It may create volatility around Tuesday, and we'll wait and see what happens. So from my perspective, from a swing trading perspective, I'll come back and check the markets in the evening. I'll be doing a live session for all my room members, so we'll be able to review and see what's happened off the back of that. For me, I think the uncertainty, one thing we can say, we know there's a vote on Tuesday. We know we're meant to be leaving the European Union the end of March. I'm just going to put an M in there. The question is really, I think the uncertainty is going to come in between in terms of, well, what will happen? If the vote is rejected on Tuesday, there's certainly going to be a lot of uncertainty, which could bring choppy volatility to this and other currency pairs, or it could mean that we get a move depending on what may or may not happen along that route. We were talking about this in our Sunday prep session with all our advanced students this morning, is it may be that there are some spikes and some sudden moves and some uncertain things happening with the pound against the US dollar, other pound currency pairs, during that time between Tuesday and going forward, because this is the uncertain bit. So this is why it's so important that you manage your risk, because you may get good trade opportunities on the pound against the US dollar, or we're looking at a couple on pound yen at the moment, euro yen. The reason we want to manage our risk is because there could be some volatility around all of the pairs around the pound, and that could have a knock-on effect on other currency pairs. So now we've got this oil trade that I want to just show you. So we've come down into the support, and what we got is we got a setup here. We cancel because of the risk to reward, but with oil I've got a long-term view where I think we can get in and around this area here. It might not get there straight away, but I've got a long-term view based on what I'm seeing on the weekly chart, or I say a long-term view, more a medium-term view, where we can at least get up into this area here and retrace 50% of that move, very much like what I was showing you on the S&P. So what I'm doing is looking to build a position over certain strategic entry points as we go. But what I want to do is also close that. So you'll see the image that's just come up. This is a trade where I got in, you can see, opened on the 2nd. So it was into the trade at this area here. And even though we haven't broken the trend line, and then what I've done is I've closed some of that, not the entire position, but you can see I've closed some of the position on oil. And what I've done is essentially bank profit, because what I'm looking to do is get back in to that trade at a couple of times on this way up. So we'll see if we get that opportunity, and we'll track that live over the next couple of weeks. We may not. We may come down from here and roll over, which means the position that I'm currently in will end up being a loser, but that's offset, as you can see, by that trade there. And we also had a winner on our position-based strategy, our first day of the month strategy. That was a long trade. So I hope that was useful. It's great to be back on the market commentary. Trade safe, be careful around Tuesday, and I will be back with you in a couple of weeks' time for another update.